In this video, I'm going to walk through a cash budget as part of your master budget. For frame of reference, our starting point was our sales budget. If we're a manufacturer, then that drives our production budget, which drives the three elements of manufacturing costs: direct materials, direct labor, and manufacturing overhead. We can't forget about the non-manufacturing or period cost of the business, which would have been our selling administrative budget. Once we've gotten all those from sales, materials, labor, overhead, and selling administrative, we're going to use that information, the cash coming in, the cash spent, to then prepare our cash budget. That's why we needed to prepare all our other budgets before that. In this particular example, we're going to do the cash budget for the year broken down by quarter. Here's some good news. They've already pulled together the predicted cash receipts from our sales, broken it down by quarter. They've also already prepared total expected disbursements from our material, labor, overhead, and selling administrative. They've already accumulated and done some heavy lifting for us. So I'm going to start out with our first quarter and look at what do we know is going to be our beginning cash balance for the first quarter. They told us that that's going to be $20,000. So that's given information there. To that, I'm going to add what are expected cash receipts for the first quarter. That's going to be $180,000. So if I start with $20,000 in my bank account and I expect to collect $180,000, my total cash available for spending is going to be $200,000. Well, I need to subtract what I believe is going to be my spending, and that's predicted to be $260,000. So subtract that $260,000 from the $200,000 cash available, and I've run into a problem. My predicted overspending or deficiency, not excess of cash available, but deficiency, is going to be $60,000. Here's some good news though. I'm using this to predict for the future, so I know that I'm going to have a shortfall. Maybe this is a seasonal business that has to build a lot of inventory but hasn't yet generated that sales. So they got a lot of spending here compared to the actual sales and cash receipts coming in. So I'm going to read through here. It tells us that the company requires a minimum cash balance of $10,000. I want to have maybe my bank requires a certain amount, or I just want to have a little bit of buffer just in case I have to spend more. We have, though, a line of credit, so that's good news. We can borrow any amount from our local bank at a quarterly interest rate at 3%. I'm going to borrow that amount at the beginning of the quarter, so I already know that I have a deficiency. I want to start out borrowing at the beginning of the quarter so I have available cash throughout. And we can repay loans, any or all part, at the end of a quarter. I'll also note interest payments are due on the principal at the time we repay it. So we're not having to pay interest quarterly. We can repay at the time we pay out the loan. So jumping back here, we have a known deficiency throughout the quarter of $60,000. We're going to have to borrow. What are we going to borrow? We're going to borrow $70,000. Why are we not borrowing $60,000? Because we need also a minimum amount of cash on hand at the end of the quarter of $10,000. So if we borrow $70,000, add that to our deficiency, or negative $60,000, that brings us to an expected cash balance at the end of the first quarter of $10,000, which is the minimum amount we want to have. I'm going to move into the second quarter. Our expected beginning balance of cash for the second quarter is the ending balance from the first quarter of $10,000. Now let's hope this works out better for us and we have some cash available to do a repayment of our, at least part or all of our loan. Our expected cash receipts in the second quarter were $330,000, so it looks like maybe this is a seasonal business, more cash is coming in. Add that to our predicted beginning balance of $10,000, our cash available is $340,000. Our spending is a bit less than we had in the first quarter. It's only $230,000. Subtract that from our $340,000 in cash available, and that gives us an excess of cash available over disbursements of $110,000. So this is good news. We're finally having our cash come in. Since we have more cash than we need, we can go ahead and make a repayment of our loan. Notice I'm not listing it under our borrowing. Under financing, I'm listing as a repayment. I want to note that we don't know exactly when this full $110,000 excess is going to come through. We borrowed the $70,000 at the beginning of the first quarter because we knew we were going to shortfall. We're going to repay the $70,000 because, again, the $110,000 is going to come a little bit at a time. We're going to repay the $70,000 because we have more than available cash here at the end of the second quarter. Why am I stressing that? Because that's going to affect the interest. Our $70,000 principal that we borrowed times our 3% quarterly interest rate times 2. Why is it 2? Because I expect to have that $70,000 for 2 quarters. I borrow it at the beginning of the first quarter. I don't pay it back until the end of the second quarter. So $70,000 times 3% times 2. The total interest I need to pay at the end of the second quarter, because they allow us to pay the interest when we're paying back the loan, is $4,200. Again, $70,000 times 3% times 2 quarters. So my total financing that we're going to pay back is $74,200. Subtract that from the excess of cash available over disbursements of $110,000, and that's going to leave us with cash available at the end of the second quarter predicted of $35,800. Good news is that's more than our minimum balance of $10,000, so we're not going to need to borrow any additional cash for a second quarter, and that's going to move us into our third quarter with a beginning balance of $35,800. I want to make a couple notes also, very similar to the issue that we had with our production and our direct materials budget. We can't add all of our columns across when we want to get to our totals for the year. For example, our beginning cash balance for the year is the beginning cash balance for the first quarter of $20,000. I also want to note, even though I don't have the dollar amount listed here, our ending cash balance for the year is also one that we can't add across. Our ending cash balance for the year is the ending cash balance for last quarter, which would be the fourth quarter. That would be our ending amount. Hopefully that helps you with some tips in preparing your cash budget.